All right, let's get right into it. For as long as any of us can remember, real estate has been this untouchable cornerstone of wealth. It's the world's biggest asset class, but for most people, it's just been completely out of reach. Well, today, we're talking about a massive technological shift that's about to change all of that. A revolution that's set to explode right around 2026. And this quote, this isn't some far-off dream. This is the core promise of what we're digging into today. I want you to really think about that. We're talking about turning one of the most expensive, slow-moving assets on the entire planet into something you can trade from your phone, literally in seconds. That's where we're headed. So here's how we're going to break it all down in this explainer. First, we'll look at why real estate is so broken to begin with. Then, we'll dive into the promise of tokenization. We'll explore why 2026 is the magic year this all goes mainstream, get into the nitty-gritty of how it works, show you how to avoid the scams, and trust me, there are a lot of them, and finish with a look at the future. Okay, so first things first, why does real estate even need a fix? I mean, everyone knows it's a great investment, right? It's real, you can touch it, it produces income, but the actual system for buying and owning it, for the average person, it's a complete mess. I mean, this slide basically captures all the pain points we instinctively know. You need a boatload of cash just to get in the game. If you need to sell, good luck. It can take months. The costs are insane, with agents and lawyers taking huge cuts. Plus, you're usually betting everything on a single property, which is incredibly risky. And let's not forget the joys of being a landlord, right? That 2 a.m. call about a burst pipe. Now, you might be thinking, what about REITs? And yeah, they help with liquidity. But here's the thing. With a REIT, you're buying stock in a company that owns real estate. You're not buying a direct piece of the building. You're subject to stock market swings and corporate overhead, not just the raw performance of the property itself. And you might think this is just a problem for the little guy, right? Well, think again. The entire professional real estate industry is staring down the barrel of a monster crisis, and it's forcing them to get creative and fast. This number right here, this is the stuff of nightmares for commercial real estate developers. They call it the wall of maturity. Basically, between 2025 and 2026, almost $2 trillion in commercial real estate loans have to be refinanced. And remember, most of those loans were taken out when interest rates were near zero. Now, they have to be refinanced at today's much, much higher rates. It's a ticking time bomb, and it's creating a desperate scramble for new forms of capital. This crisis is the catalyst that's shoving the old world into the new one. So out of that massive problem, a really elegant solution is starting to emerge. And look, this isn't some weird crypto fad. This is a fundamental upgrade to how we own things. It's about making a piece of a skyscraper just as easy to buy and sell as a share of stock. And this slide just lays it out perfectly. Think about it like this. Coca-Cola is a gigantic company, but it's sliced up into 4.3 billion shares that anyone can buy or sell in an instant. Tokenization does the exact same thing for a building. That one single illiquid building becomes thousands of tiny liquid digital deeds. Suddenly, this exclusive private asset becomes open to everyone, creating a global marketplace where ownership can be transferred in seconds for just a few bucks. So let's just hit pause for a second and define this, because this part is absolutely critical. Tokenization is just creating a digital certificate of ownership, a token, on a super secure shared database called a blockchain. But this token isn't just a JPEG. It is a legally binding contract. It represents your actual fractional ownership of the real-world building. When you buy the token, you are legally buying a piece of that property. Period. Okay, so this is where it gets really exciting. Why is this all happening now? Well, we're looking at a very specific moment in time, 2026, when the old world of traditional finance, or TradFi, is set to collide head-on with the new tech of decentralized finance, or DeFi. And real estate is right at the epicenter of this collision. And this isn't just a guess. These are dominoes that are already starting to fall. You have proposed laws like the Genius Act, which would basically create a regulated official internet dollar for doing these deals. Then, at the exact same time, you have that $1.8 trillion wall of maturity creating massive demand for new capital. And while all that's happening, you've got the biggest players in the world, we're talking BlackRock, JP Morgan, already building the financial highways for this. They're tokenizing U.S. treasuries, which is just the first step before they move on to other assets, like real estate. And if you're thinking, okay, that's a nice theory, but is this real? Well, look no further. The proof of concept is already a massive success. The market for tokenized U.S. treasuries, literally the most boring traditional asset on Earth, has already soared past $9 billion. The The institutions have built the highway. Real estate is just the next wave of cars getting on. All right, so we get the why and the when. Now for the fun part. How in the world does a physical brick-and-mortar building actually turn into a digital token? It sounds like magic, but when you break it down, it's actually pretty straightforward. It happens in 3 core stages. So everything, and I mean everything, starts with the legal groundwork. First, the actual property deed is put into a special legal entity called an SPV. You can think of it like a digital vault that holds only that one building, nothing else. Second, digital tokens that represent shares of that vault are created, and the tech that makes this possible for the big guys is a standard called ERC 3643. It's basically a rulebook built into the token that handles compliance, which is exactly what institutions need. Finally, who owns what is tracked on the blockchain. This doesn't replace the legal system. It's a technology layer on top of it that makes everything transparent, secure, and instant. Okay, I know what you're thinking, because this is the #1 question you should be asking. This all sounds great, but with all this digital stuff, how do you know the building is really there? How do you know you're not just buying digital vapor? The answer is something called on-chain proof of reserve. The good projects don't just say, "Trust me." They give you a digital paper trail. Imagine clicking on your token in your wallet and instantly seeing a link to the official county deed record, a PDF of the latest appraisal, and a live feed of rental income. This isn't about trust, it's about proof. It's about making everything public, auditable, and verifiable, so you know the asset is real and legally connected to your token. Now, with all this incredible potential comes a huge risk. This space is still the Wild West, and for every legitimate project, there are 10 scams waiting to take your money. So let's give you a quick and dirty framework to tell the good from the bad. This checklist right here is your best friend. First, and this is the most important one, check the legal structure. Is the SPV in a country with strong property rights, like the US or Switzerland? Or is it in some sketchy offshore jurisdiction? If the legal wrapper is garbage, your token is worthless. Second, look at the yield. Real estate pays rent, maybe 6 to 9%. If someone's promising 20% returns, that's a giant red flag. Third, demand transparency. Can you see that proof of reserve we talked about? Are there third-party audits? And finally, do you know the exact address of the building you're buying, or is it just some vague real estate pool? And this quote from the source material just says it all. If it sounds too good to be true, it almost certainly is. Real estate is supposed to be a stable, relatively low-risk asset. It should not be paying returns like a risky tech stock. So please, be skeptical. Be very, very skeptical. Okay, let's bring it all home. After all the tech, the legal stuff, the warnings, what's the bottom line? What does this actually mean for you? Well, it boils down to an absolutely mind-blowing change in the speed and cost of buying and selling property. I mean, just look at this. It's night and day. The old way, you find a house, you fight for a mortgage, you're buried in paperwork for a month, and you shell out 10 grand in closing costs. The new way, you see a property you like online, you connect your wallet, you click buy, and the whole thing is done in 10 seconds for a cost of about $2. And you can get started with $50. It's a completely different universe. And that right there is the revolution. It's that simple. We are watching the world's biggest, most important, and most locked up asset class become something anyone can own a piece of and trade from anywhere in the world instantly. It's the democratization of wealth creation on a scale we've just never seen before. So I'll leave you with this one last thought to chew on. The internet took all the information that was trapped in libraries and books and made it instantly available to everyone. We are right at the beginning of a technology that is going to do the exact same thing for value. For every stock, every bond, every piece of art, and every building on this planet. What does that world even look like? And that's our look at this incredible shift in real estate. The move from paper deeds to digital tokens is happening, it's real, and 2026 is shaping up to be the year this whole thing goes from theory to reality.